Chris, when can you join us? And I mean, we need to give you a round of applause. Sneha, can you join us? She comes with a world of experience as the founder. Thank you very much. Where can you join us? I mean, they're going to tell you all about themselves. Don't worry. Cherotich, can you? Thank you very much. All right. We're just going to continue the conversation, but before we continue the conversation on the back of the data, I would like every member of the panel to just say one or two words about themselves, what they do, and their why. So,
It's Chris Maranga. I'm the Africa director. I've been in this business of investing and
Hi, everyone. I'm Sneha. I am the co-founder and CEO of Uncover. Okay, so we're creating products that are specifically made for melanin-rich skin. The second problem we're solving is education and knowledge. So when we did the data on the key problems in women's wellness, it's actually not knowing how to take care of your skin concerns or your wellness issues. And so we're driving that through our tech platform and our digital content and community. My background is in finance. So I actually worked in private equity and consulting. I decided to pivot to entrepreneurship. It looked a lot more glamorous on the outside. And I thought, I'm going to be a business owner. I'm going to work for myself. But really excited to be here in year 6. My why is really linked to Uncover's mission. So of course, we sell products. That's how we monetize. That's how we make revenue. But I have had a troubled journey with my skin for years. So I believe that women own their journey and don't own the need to look perfect. They'll be more confident in job interviews. They'll be more confident on dates. And I think, we talk internally. We're selling products, but our why is to empower women with confidence.
My name is Tolulope Babajide, and I'm the program coordinator for FinRISE, which is an acronym of resilience through institutional strengthening and African Guarantee Fund. And I've been very fortunate to work with African markets doing one thing, women's economic empowerment, because I believe so much that if women are economically empowered, we are able to then see a shift in the economy. But failure to really understand the significance of these demographics will perpetually make us to talk about that gender financing gap. And I'm really happy to be here today. Thank you.
Good morning. I'm Cherotich Rutto, the founder CEO Tawi Fresh. And Tawi Fresh, we've developed an AI-powered B2B digital marketplace that is digitizing the agri-commerce, financing, and value-added services all the way from farm to fork. For us, the why is there's a $4.5 billion opportunity that just sits right here in Kenya in the farm produce value chain. And for us is to organize the supply chain and ensure that farmers are getting better incomes. The MSME on the end is also getting fair price, transparency, traceability, and of course increasing their profitability as a business. We currently work with over 2,000 farmers, 65% of them are women. So we're very deliberate about working with female farmers and over 1,000 institutional buyers who sit on the buyer side. Thank you.
I need to set the tone here that we're not here to lament on why women are not getting funded. The major conversation here is how do we change this data point? 0 is 0, and that's the truth. And if that number is 0, how do we move from? Because if you move from 0 to 1, that's 100%, and that's a win in a certain sense. So how do we move that conversation forward, and how do we change that narrative? I think the first thing you would then say is, I mean, she mentioned something around access. Is it an access problem that women are not getting funded? And I want Chris to just give us a bit of, is there an access problem? Because in your deal pipeline, the pipeline doesn't fall from the sky. It comes from somewhere. So can we just deal with the access problem from your perspective very quickly?
Thank you. That's a very important question. And I think sometimes I think it's easy to say that the problem is pipeline. But I think it's a bigger problem than that. There's a very serious perception bias in investment committees and investors. And how that bias looks is that there's kind of like an acceptable and said norm of what a successful entrepreneur looks like. And normally, that bias tends to say a successful entrepreneur is likely to be male in tech with a VC model business. When a business is brought, or an entrepreneur is brought to an investment company, and that is not the case, then you find right from the analysts up till the investment committee, there's that bias just keeps multiplying and second guessing, is this woman going to be able to scale? Is she going to be able to be aggressive enough to reach exponential growth? Because typically when you look at female-led businesses, women will grow businesses more steadily, with more caution, less aggression. They'll not oversell usually. A lot of men will oversell with aggressive targets, and the industry is kind of suited to that. And then when you don't fit that narrative, then you just find that at each step of the way there are blocks. So I think for ACUMEN particularly, how we address that is, first of all, we are very intentional about staffing our investment teams up till the IC level with women. And that already removes a lot of that bias, you see? And I think the investment industry, has to start with giving women more power in making those investment decisions. And then you will find the entrepreneurs are now benefiting a bit more.
Thank you very much. I mean, you hit a very strong note there, and I'm going to shake the table a little bit, just so that we're a bit controversial, right? Because we want to find new solutions. I'll move over to Cherry, right? If you're sitting across the table from a woman who is an investor, right? Because you mentioned something, and I want us to address it. If you're sitting across the table from a woman who is an investor and you're pitching to her, do you think she carries biases in her mind about what you're doing?
I think it depends. It really depends. I don't want to villainize women, and I'd say all. It really depends on the sector that you're in, and if you've gotten your unit economics right. I think most of us as entrepreneurs, we go into these investor rooms. Um, already feeling sorry for ourselves, like we're building legit businesses. And there are people here who've left corporate life to just start what they're doing. They've left their homes, their families, like for hours on end to just ensure that whatever they're building works. So first, we should go into these rooms with a lot of confidence, and speak our numbers. I think sometimes when we fluff around and we don't get our numbers right, that's where our credibility starts to water down. So get your numbers right. It's not about woman or male. Just get your unit economics right. Get your structures. Be able to articulate, how you set up your governance structures. How your business is not necessarily risky, but it's complex. So how then do you start to explain that I'm not risky, I'm in a complex value chain or process. And I think once you provide that clarity, then the biases and because once somebody understands you, then you kill all the biases. So I don't think women are difficult or they come off like women investors. I think we just as founders have to also articulate ourselves with our numbers very clearly.
Okay, so articulated numbers. We're beginning to see the things coming out very clearly. We need to talk the business. I think we spend a lot of time talking other things. If we talk the business deeply, men talk the business deeply. And I think women need to talk the business very, very deeply. She mentioned something, being able to demystify the complexities and just communicate. And I'll go to Tolulope. I want you to touch on this bias a little bit more because I think this is the biggest thing we're touching on. And this is the first big point we're touching on. Talk about this bias a little bit and what you've seen from your own perspective dealing with female entrepreneurs.
I'll start with the root causes of the bias itself because I believe so much in understanding the root causes of a particular noun. And you mentioned something when you were talking, Chris, that a lot of the high seas dominated by men. You also mentioned one thing that the sectors also, I think it was when Pamela was presenting and he showed that infographic and you could see, the sectors where men are dominating. We have fintech, we have energy, we have logistics, and then right below that we have agriculture and trade, and then below that we have the other sector. So when it comes to buyers, the first thing is the two-sided part of the buyers, internalized buyers. You said something that when you sit across an investor, either is a male investor or a female investor, do you think they're biased towards you? I would say yes. One thing about bias is that it's internalized for so long that you don't even realize that you are exhibiting bias against someone because it has been there for such a long time. It has become something that we exhibit unconsciously. And when it comes to women's businesses, the truth is that no matter how much of repayment rates that we've seen clearly in LM based on research, no matter the capital efficiencies that women have demonstrated when it comes to the businesses, no matter the amount of business resilience, there's still an unconscious bias that shows that women businesses are riskier. So we have a mispriced risk. And these same risks are not associated with male founders. So the truth is that, so what can we do about it? Because you said something very important. We are not here to lament, but rather to shift. I think it's always important that for every investor that is in the room at every given time, we have to challenge the bias that we have. And the truth is that when we look at women's businesses, is that we give men a lot of room to fail, but we don't extend that same grace to women founders. Rarely will you see a woman startup that fails in a particular venture and then comes again. The truth is that by the time you're looking at her, you've already assumed that this person is very risky. This organization, this institution is very risky. So when we are even asking as investors, when we are asking these women founders questions, we're asking them from the point of prevention and losses rather than from the promotion and the growth in which you're asking a male founder. So by the time you put together, the truth is that what leads to bias is multi-layered. On the side of the startup, on the side of the female founder herself, she has also internalized a level of bias about herself, about her business. So when she's going into that room and she's standing there and she's not even extending grace to herself. She's not able to demonstrate to the investors that last year we didn't have any profit, but this is as a result of something. Maybe it was a climatic shock that happened, and because of that, that is why we were not able to have profit. But rather, she's trying to cover it up. We are so much in the business of making everything look perfect. We want to be perfect to the investors. So we're always talking from the standpoint of I am doing this because because I'm perfect because we've gotten our numbers. But what if you don't get your numbers? Right. You talked about numbers. The truth is agriculture is very volatile. My program is on agri-food systems. The truth is that there's going to be a lot of defaults because, for example, in Zambia, which is one of the countries that I cover, there's been back-to-back climatic shocks. Either this year is drought, the next year is flooding, the next year is unpredictable heat waves. So how do you expect a woman farmer to cope in that situation? There's going to be defaults. So have you already extended grace to that founder and to say that even if she doesn't, are you de-risking her in the first instance? But a lot of women, we don't even have that. So the bias is structural and it's behavioral.
I like the way she ended it. Bias is structural and behavioral.
Yeah.
Right? And those are two layers. Now one touch on the structural problem. Right. It's interesting that you have the mic now because you were once an investor, now you're a founder. Right. And I think it puts you in a very poor position to answer this question. The second fault line that we may see, and piggybacking off this ban, because if you're going to them, there is a due diligence problem, right? We mentioned IC. For this data to be coming out, it means women are not crossing that due diligence line. That's what it means. Because if we have more female founders crossing the due diligence line, there will be some sort of funding or the other. So, what are the, and now we're going deep now, what are the structural gaps that you identified as first an investor, and second as a founder in crossing that due diligence line?
I'll talk more from the founder perspective, and then I'll go to the investor perspective. I always call being a founder a full body experience. But one of my biggest realizations was when I raised from two female funds, right? These are females who are making the decisions. They're gender lens funds. To your point, we need more female allocators and decision makers. But the due diligences that I went through with those female investors was so much deeper than the DD that I had to go through with the male investors. Now, one of them in particular lasted 9 months, and at some point, I was not only sharing my financials and my business plans and customer references, I was going to the detail of share the photos of this, give me the proof of the warehouse, give me the address of this, and it took me so much time. And that investor has now become a friend. And I gave her this feedback. I said, that DD for the stage that I was at was so much deeper than the male investors. And she goes to me, the problem is all the way at the top of the chain, because the people that have given her money have put these expectations on her. And actually, I was on another panel where I shared this. She heard the recording and she called me and she was like, let me explain. And so I think the realization is that it's not only the founder and the investor, it's where is the ultimate capital coming from? And what are the expectations of that ultimate capital? And how do they differentiate between male investors and female investors? And I think that she said that she's being asked a lot of questions and she is not being given enough grace to fail. So she needs to do her DD even deeper. And that's what's causing that problem. So there definitely is a trend in my sort of 6 years of founding experience of female investors doing deeper due diligence. If I talk about DD in general, I totally agree with what you said around women being asked more risk-based questions. And I think this comes back down to the structural bias. What will you do if the currency fluctuates? What will you do if competition comes in? How are you going to become the Pan-African brand? I think that when those questions come, that's the behavioral bias. I'm less equipped because I have such a fear of failure in me that I start answering with defensiveness. So it's like this compounding problem where the DDs are deeper, the questions are more risk-based, and the inherent personality, like I am that perfectionist. I want to prove that everything is perfect. I want to show, and then I'm like, even if the currency goes up, the conversation is not about the opportunity. The conversation is about how are you not going to fail? And I think that is structurally, a big issue. There's also, and I have amazing male investors, so this is not about my investors, but I know that, I can see the questions, like, are you going to be able to do this? To be honest, I'm asking myself the same questions, but it is there in the DD process as kind of like, let's get to know you, but that is the bias that exists. I think that's what I would say on DD. Yeah.
Okay, it's obvious that the women go through more grilling. That's what I'm hearing here, right? How should female founders prepare for this DD hurdle? Because the truth is this: if you cross DD, you will have a good conversation. If you don't cross it, so what is I hear resilience, I hear different things, but what do women need to do? In coincide fashion, I'm very bullet points because people are taking notes and people want to have real answers.
Before I go into that, I want to also address a structural problem that I also see. The way capital is structured for VC and private equity, I think is not very well suited for women entrepreneurs. Most of the models are telling you, build, scale, and exit me in 5 to 7 years. entrepreneurs we've invested in who are women, the mind does not work in a 5 to 7 year horizon. What we've done for this is that we've convinced our leadership that we need to have longer horizons for capital in Africa. And we are looking at now 10 to 15 years. And that's the time when I think
that is a better applause.
and that's a structural solution that a lot of VC funds and PE funds, and I'll challenge those who are sitting here, you need to push these kind of interventions with your leadership because the current models are not working. And and so that's one solution. In terms of how women entrepreneurs can prepare better for DD, I think it comes to the point that you raised earlier about clarity and starting with confidence, just like you said. You know, you cannot go into a DD when you're second guessing yourself. You need to have that confidence, and you'll see it all the time. I was doing a DD in Lagos the other day for a cassava business. The minute I was like telling the team, we have to do this deal, like this guy is going to scale this business. But then when the wife was there, the Met guys are saying they're going to be floods next year. I'm not sure if we're going to make it. Maybe we need to reduce the forecast. And you know, you're just feeling investing. A lot of it is the people first. You know, if you don't get that connection with the person and you don't feel that this person is confident enough to weather all the storms and really when things are bad, just to push along, then you start having that unconscious bias kicking in and you're like, will they be able to manage life and business, you know? So it's not really a checklist. I mean, you can go on AI and you'll get a perfect checklist, but it's how you deliver. Speak with confidence, you know, don't second guess yourself, don't doubt yourself. And I think that's where the gap is.
Interesting perspective. I want us to now start going into more solutions, right? Let's start discussing the solutions. We've identified problems. The bias problem. There is the fact that women already second guess themselves before they get into the room. The DD is deeper. Co-founders are not as prepared for the deep process. It's going to take 9 months. It's going to take 9 months, and you have to just stay there. Sometimes people pit out. Now, in terms of solutions, I'm going to ask from the founder's perspective. And the reason I say this is because they're already in it. Chris already gave us one solution, which everybody loves, a longer time horizon, right? Sneha, what do you think possible solutions that can sort of change this tide and get more female founders funded?
Yeah, I totally agree with the longer time horizons, by the way. I think, the 10-year, even 10 years is not sufficient. It just takes longer to build in Africa. It has been said already, but I think more non-VC capital as well. I was in a room with female founders, and it was like this closed door room, and the general theme was like, be careful of VC, it's not right for you. And, I think that there are just horror stories of women who have been invested in by VC. So for me, if I could find a family office that was able to take a long-term 15-year bet on me that doesn't have the exits, but believed in what we were building without squashing the valuation up front and diluting, I think that would be amazing, right? So alternative long-term capital, but when I say term is one part of it, but source is also a part of it. For me, I think working capital, because women are often in sectors that need working capital funding. Everybody understands that there's a huge working capital problem. For me, I'm trying to raise debts, but without a personal guarantee, understand that I'm not profitable. So what is the working capital solution for non-profitable businesses that are scaling? I don't know. I've tried everything. And I'm finding some kind of grant and concessionary debt. But again, back to what was being said, I don't know if that's good in the long term either. So I think, alternative sources of capital. On the founder side and female founders showing up, we've talked about confidence and behavior. I definitely think that there is a role for female founders to match the energy. We can talk a lot about the fact that there are too many male allocators and we need more female allocators, but that might take a generation to shift. That might take a long time. So the reality is we are where we are. We know that more women are inheriting money now, and maybe in 20 years you'll have more female, at the ultimate source that are deploying capital. But for me, if anybody has seen Emma Greed's new book, Start With Yourself, she's coming out and saying that there really is a power play here, and women really, really need to own that big story and believe in themselves. And I know the question is going to be how, what is the solution? Because they have great businesses, but if we can truly project into the future and sell ourselves a little more and believe, because when I started, I didn't believe that I would get where I did. I mean, I kind of learned from my male founders because I'm part of an ecosystem to pitch and, to sell myself. But the reality is, can we instill in women that bigger vision and that ability to play that power game a little bit more, not just ask for the male allocators to change?
Cherot, I want to hear your view on this same thing, particularly from the perspective where you are in it. You've run a little bit. What do you think, from your perspective, needs to change?
So I think the real opportunity here is not about fixing money. It's fixing how capital sees value. I'll just give an example. This is my first time fundraising. So I've been in spaces where you really get discouraged. The value I've put there, my investment value is a bit high. And you start getting discouraged. Like, this is just, and there you start losing confidence. Like, this value is too high. Do you think we'll make it, etc.? So I think the solution is back to what you said. How do we start getting phased funding? So sometimes you come in, we want $3 million, but how do we start facing it as investors? We face it out, articulate clear, we both articulate clear milestones to unlock, etc. Patient capital, you alluded to that, so that is very good. That is what we want, because the sectors we are in demand for that. We are not in those high growth kind of sectors. So I think, I don't want to repeat myself, but all what she said is exactly what as founders.
Great. Now I'll move to the last point: instruments. Right? Because after you cross the DD leg, then what instrument? And I think we've touched on it: debt, equity, working capital. And I'll come to you because you are right. That's right up your alley in terms of blended finance as a solution. And I think Pamela really touched on that. Could that be some sort of solution or some sort of possible way to start to change the tide in terms of female founders and funding? What is your perspective on that?
On a lighter note, I was facilitating a session yesterday, and it was female founders, and we are having a very good conversation. And I paused and I asked them questions like, "Oh, what do you think about this?" And almost all of them would say, and these are very, like, they're not bottom level at all. And they would say things like, "Am I making sense? What I'm saying, is it okay?" And at a point, I stopped them and I said, "This is what we do. You keep asking. You're asking me to validate you. Why? Even if you're saying rubbish, can you say rubbish with your full chest?" So going back,
Okay.
going back to what he said, I think for a long time, and going back to what Pamela presented, where we saw grants, in fact, for a long time, women's businesses or women entrepreneurs have sort of relied on grants. They've gone away from several other alternatives. But the good thing is that there are very great instruments that are in the market right now. And one of the such instruments is the program that I'm currently leading at African Guarantee Fund. And it is a blend of it's a 3-in-1 package. It's concessional liquidity alongside its guarantee, partial guarantees, alongside with technical assistance. The truth is that it's not one thing that solves women's problems or women's entrepreneurs' problems. It is a combination, it's a bundling. And I really love the word bundling of solutions, because when we say that, oh, women have to do this, you ask that question, you fell into that hole when you asked him, how should women prepare? Because that is what we've told ourselves. Women have to work to meet the system. But the actual fact is that the system has failed women. The truth is that when it comes to gender, and that is why we have genderless investing, because investing itself cannot be agnostic. It has to be very specific. For a long time, I remember when financial inclusion started, it started with us, with banks, microfinance, designing pink products. Truth is that even when they were designing pink products, they fell into another hole. Women are not homogeneous, and women founders are not homogeneous. And I'm going to take it a little bit from the sophisticated level that Uncover is and you are. The truth is that when you talk about a woman founder, what is the picture that comes to your mind? And that is where, again, bias comes in. Have you ever thought that a woman with 3 plots of land is a founder and that she needs a specific amount of kind of instrument? And what is the instrument that she needs? A ticket size is absolutely small, but does she have the capacity to scale from that point of 2 plots of land? And I'm going to give you an example. I was in Rwanda last year in Yanza. I saw a lady, and he had gone with a fintech that was supporting their cooperative. It was a chili cooperative. And there we had about 200 chili farmers in that cooperative. And when I met the woman, she was backing a baby. And she told me that 3 years ago, I was just a farm hand. But with the support of the fintech, which is seasonal, the kind of loans that they were providing to her, is the repayment is seasonal. It is about understanding who your segment is. Understanding the kind of farmers that you work with. Repayment is going to have to be seasonal for them to be able to repay you. And that woman said, 3 years ago, I was just a farmer. Now she has 2 hectares of land. She has been able to employ 5 full staff. And during season of time of harvest, she brings on about 25 part-time. And that, for me, that is growth. I don't understand when you say scale. What is the meaning of scale? Scale is not from an investor point of view. It's from our own view. I think it's very important to segment, and it is based on the segmentation that we must deploy instruments. Instruments must not lead before segmentation. I was in Tanzania last year doing a gender scoping mission with women in seaweed value chain. And I was right in the ocean together with them, where they're cultivating the seaweed. And these women had gotten capital from CLDB. But back to back, they were defaulting with CLDB. Is it that they were not producing enough seaweed to sell? No, they were producing enough seaweed. But then the market is so fragmented. The government has not pegged the price. Because when we think capital is not only the problem that women founders have, capital is just one of the problems that they have. And so when we are thinking about solutions, it has to be bundled. It has to be access to markets, access to networks, access to affordable capital. The reason why a lot of women shy away from debt is because it's not timely, it's not affordable, and it doesn't take into consideration their realities. So if we have instruments such as the one that we have on the program that I lead, is that we are going to ensure that there's affordable capital. We are going to de-risk it. We are going to offer you technical assistance. That is very needed. And the other instrument that is very important is that when we talk about capital, when we talk about channeling of capital, we have to also know, and you mentioned something, I think it was you that mentioned it, is that the product through which this capital is channeled is very important. Patient capital is very important, but we cannot have patient capital if we don't even understand the segment that we are talking about. And this time, I'm not only standing with the women in this room, but I'm also standing with the women whose voices
are not going to be heard in this room. The women in agriculture, the women in retail trade that are literally breaking their backs. So we all need to begin to work together. ACUMEN working together with AGF, also working together with other fund managers to rethink the way we design instruments for women founders. Until then, it's not one instrument that is going to work for women. Sometimes we have to think outside the box. Sometimes we've not even thought about the instrument that is going to work for a particular segment of women.
Okay.
So for me, I think it's the intentionality
Behind
to ensure that whatever is needed to be put in place to ensure that women scale their businesses is put in place.
Okay.